So here are the stock picks for the week. We have 2 long positions and then 2 short positions. Let's try to see the shorts first since the market is correcting. So Indian Prime went to IRCTC, Indian Railways catering platform, as we all know. It was having a cup and handle. Even now it's not broken that in a way. There's a neckline of the rounding pattern, and seems like it is having a breakdown because momentum has slipped into the bear zones, and trend also is bearish, and then the strength of the bearishness is increasing. Candle is solid negative bearish, so there's space to go down towards the bottom of this channel. So there is a retest that could come at 838 where the election time low was made in June. So it could find some support there. If that is there, then immediately get out. Book the profits, small profit, and get out. But if that breaks that level of the previous low, then we can extend that to a 1:1.5 risk reward. Trade volumes are not very bearish, but it's decent enough, I think, given the market condition. So momentum negative, trend is negative and rising negativeness. Candlestick is bearish. So reasonable risk reward 1:1.5 at least before it finds the next support it can be found. Right, that's the IRCTC trade. And the second short is the RT Industries. That's a chemicals company. I'm not sure whether it has anything to do with the China stock market revival or not, but it also has formed a very solid negative bearish candle, and it is also a box consolidation that is confirmed to have broken down, and it is at a Fibonacci retracement level of 38.2, and if that is getting breached is where we have the entry for 1:2 risk reward, because it is having negative volumes decent enough, and the trend is bearish, and the strength of the trend as per the ADX is DMI positive and rising up strength. Bearishness is increasing while the momentum has slipped already, confirmed into the bear zones of RSI. So it could give a decent risk reward 1:2 of the Industries chemical company. Those are 2 shorts, the IRCTC and the RT for the next week, and we have 2 longs also, and both are from the defensive sector. One is Brokerage, which is the old NIIT, and that seems to be a defensive sector stock. IT is not doing that bad in the US. In our side also, IT may see some growth. It's a defensive, and all the market is falling. Defensive sectors could hold on. So Brokerage is breaking out. Now they're still bullish on both time frames, taking in the weekly as well. Trend is bullish, and this bullishness is increasing in the strength as per the ADX. RSI momentum is bullish, as I already said. Candlestick is also bullish candle that we have the last. So a decent 1:2 risk reward can be looked forward, and it's at all-time highs, as we know. It's multi-sector Brokerage. That's a long trade that we have got. And second long trade is Metropolis Healthcare. Healthcare is also a defensive sector, and that usually performs when the market doesn't perform well. So it is having a rounding pattern. The breakout is more or less confirmed. A small trade of 1:1.75 or something or 1:2 can be seen, because we have a green candle. We have momentum that's bullish rising up on multiple time frames, and we have a trend that's rising up in strength as per the ADX, and volumes are decent enough, but not above the 20 expression average. None of them that we have picked has got a above moving average volumes. I think the sell side of the long side below the market conditions currently. So make a note of this, and then have tight stop losses either way, upside or downside. So this is Metropolis can give result 1:1.75 to 2 risk reward. Long way to go before the previous all-time highs that was made. Usual reasons are momentum trade. Trend indicators are saying that. Candlestick also bullish, and it's a deficient sector actual. So those are 4 picks that we have. IRCTC short trade, or the industry short trade, Brokerage long trade, Metropolis Healthcare long trade. Hope it helps. Bye. By the way, these are not recommendations, for application purpose only. Thanks for watching. Bye bye.